Astral Foods has released its first half earnings with the poultry producer recording a dip in its headline earnings per share to 522 cents. Chris Schutte, CEO of Astral Food, spoke with us and gave us some more insight into their numbers and what they see for the remainder of the year.
Revenue up, mainly driven by higher volumes in both divisions, both in poultry and the feed, and higher selling prices. Profitability down because the extent to which the input cost went up and our ability to recover that from a slightly depressed market was not in line with one another. So profitability up 14%, and that's mainly on the back of higher volumes in poultry and higher selling prices. But the feed cost went up 23% over the period, again driven by high maize and soya prices. But our ability to recover was only in the line of about 7% in the consumer market.
Now you've got both divisions, you've got feed and you've got poultry. Can't you help each other out there as opposed to what you sell to the rest of the market?
Yeah, the poultry feed is moved over to the poultry division on a cost plus basis. So if maize and soya bean prices increase, that is transferred as an input cost into the poultry division, and obviously they have to go and try and recover that in a market. Currently also in a market that are slightly depressed on the pricing level because of high levels of imports from Brazil and from Europe, and that is obviously a replacement protein in the same market, and that have a bit of a hampering effect on our ability to move up prices.
Just staying with the financials for a moment, your earnings per share down by 17% to 523 cents, but it's still 523. You were able to pay a dividend. So tough times, but you're still making money.
Yes, and I think the good thing here is when we go into downward cycles in the poultry industry as a commodity and as the cheapest protein in Africa, we as Astral try to keep our dividend yield at a level and not move it with cycle. So I think that's a positive thing for investors. Even if we have a bad cycle now, we're not going to cut the dividend, and we have got the balance sheet to support the dividend.
You've got debt very low. So now what about the dumping? That's the nasty word for imports that are too cheap for you.
Yeah, there's two kinds of product coming into the country. The one is a typical import, which we don't have a problem with, but it's on the dumping side where other countries around the globe would have a part of the chicken that they can't sell in their domestic markets, and they would sell it to a lower price than what they could fetch for it there in our country. And that's the kind of, we call it dumping or unfair playground that we are protesting about and what we're seeking some protection from.
Well, are you going to get it? Is the government sympathetic? Are they going to put duties on these imports?
Yeah, it's not as easy as that. It's a very extended process, but I think there's enough information that can prove that there's been some damage on the local market, and we are in constant battle to prove that to the authorities, to show that it is harming the local industry and it's got a negative impact on job creation and what we want to do in our backyards here.
What about the market itself? I mean, chicken, one is told, one hears anecdotally, certainly in the fast food business, for example, chicken is by far the market leader as a proportion of the total consumption.
Yeah, I think what chicken brings is it's the best converter of raw material. So you can get a kilogram of meat for a kilogram of animal feed that you convert into that, and that makes it a cheap source of protein. So it is a nice position to be if supply and demand is in balance. But currently supply a bit hampered by imports, but poultry per capita consumption over the past 10 years has grown by 50 to 60%, which is an indication that it's a preferred protein and it comes at the right price.
So now, in the market that you're in, you're making money as you are. Tough times ahead, and do you expect to have to take market share to improve your results?
Well, market share, we don't live in isolation in South Africa, so to take market share, I think all our competitors nurture the same idea. I think the key thing is to be efficient and to do the best you can in your operation, and a lot of focus from Astral to look at how we convert nutrition into poultry meat, and with our new breed of genetics we're doing very well, and there's indications of even further improvements in the near future.
The costs, you talked about maize and soya, electricity, diesel.
Yeah, something like electricity, which is only part of our energy cost. We've got liquid petroleum gas, we've got coal, diesel and electricity. If you just take electricity year on year, the increase over the past 5 years have been close on 25%.
More to come as well.
Definitely so. And we know what has happened to LPG over the past recent couple of years with a shortage. That's almost doubled over the last year. And energy is important in our industry. Heating and keeping the right environment for the bird to grow is of utmost importance. So energy, a big part. Currently, it makes up about 22% of our cost. Together with feed, make about 74% of our life cost. So the energy, feed with a bit of labor cost is almost 95% of our cost driver in chicken.